Alright guys, so in this video I'm going to show you two slingshot setups that happened. Both were A plus, and there's kind of a difference in both of them, and it's two kind of takes that you can go about with slingshot, one being a lot quicker and one being a little bit more developed. I kind of talked about it on last Sunday's live on how there's if you want your higher win rate, your higher probability trade that's going to win, you might want to let structure build a little bit more and wait for the bigger reaction to happen. So on the first one, I'm gonna go over the first one first. This isn't gonna be too crazy of a long video. It's gonna be pretty quick. It's going over these true reactions and what they look like. So right here on this slingshot setup, we were reacting off of 243's high. So this is 243's high as well. And we had this true reaction, boom. And the reason why I call this a true first reaction is because it is reacting to the T off of our levels, right? And then another reaction to the T off of our levels. What we want to see is this exact movement, whether it be once or whether it be twice. On this move here, reasoning why I did not enter on any kind of retracement here is because solely to the rules of Slingshot, you're only entering off of either this level or this level. I had no imbalance that was there for me to fill that was paired up with these except a rejection block. And I don't use rejection blocks. I say use a inverse fair value gap or fair value gap. So if this would have came in liquidity sweeped here, off this first reaction and came down and continued to go lower, oh well, I wasn't mad about losing that because I don't even want to hop in over here anyways. I want to hop in at the most premium price that I can get, or the most discount, depending on which side you're on. So here we got some engineered liquidity set up. We have these equal highs form. Our first reaction is extremely true, which means our liquidity sweep is going to be true, our break of structure is going to be true, and then it's going to run to our take profit true. So here, had our liquidity sweep. We did not get a break of structure, but we did inverse this fair value gap up here. And I just had a really strong confluence on the 1 hour that we were going to go lower. And we got touched in here on the inverse fair value gap at the at the 1 high. And then TP ran all the way down to equilibrium. Because remember, we're New York AM and New York PM, so we're using the 81 and taking profit at EQ. And that was a $900 trade. I followed my stop loss just like this. It was up here. I had it at 12 points right at this little high here. Once I got tapped in a profit, I knew if we went higher than this point, that the trade was done. And then we came back down, made this move. So then I put my stop here. And then we came up, created this rejection there. So then I put my stop right here at this rejection. Price reacted true, came through, reacted all the way down. And this is what I mean by following your stop loss tight and true. If price is going to react true, if it's going to move how it needs to move, you following your stop where it needs to be, doesn't matter how strict or whatever it seems, it will work out. You see how close I got to my stop? And then it worked out because I was following my highs. If I was bullish, then I would be following my lows. So that is a quicker setup. That's a smaller one that happened a little bit quicker. And this was a more developed move, this trade here, and it took a little bit longer. We had a first reaction, really true here, off of the extension. We had this liquidity sweep, and we had these equal highs created up here. We also had a failure to, I think it was a failure to close higher on the 5 minute. The 5 minute, yeah. We did not close higher than this wick here. So that was indicating to me that we were going to continue to go lower, at least further down as I needed it to. And, I'm a big guy. It's also a liquidity sweep if you're counting the wick, but I'm a big guy on the candle closures. And, this candle closure did not succeed in continuing higher. And then now that we had our first reaction, we have our liquidity sweep, we have our failed attempt to go higher, and now we have our break of structure right here. Right here, we broke structure, closed lower, Now what I was looking for, now this is a big thing that I guys want you to take in and take a note of whenever you're trading a bigger setup slingshot. We have our first reaction. We have the whole setup, break of structure, right? And you could have entered right on the immediate retracement, right? But that immediate retracement on a 10-point stop was going to stop you out. So how do you prevent that? How do we prevent it? What I waited for was another slingshot setup after the bigger one formed. Because remember, slingshot's based off of that market maker model. It's the best with market maker models. And so it follows that price action. We got another first reaction true off of our gold back level right here. Had our liquidity sweep. Had our break of structure closing past here. Remember, like I said, candle closure. Candle closes past here. Then what did we get? Our retracement into this inverse fair value gap where the CE is paired up to the fucking T. And that's exactly what we want to see. I got entered in right here. Had my 10-point stop. Or no, I think I had it right here at this high. Yeah, I had it right here at this high. Because if we were going to go higher than that, I touched on this in previous videos. I put my stop where I know I'm going to have the most peace of mind of or at when it hits it. So if it were to hit that stop loss, then I know that my trade was just not shit, but it didn't work out, and that's it. There's no second guessing it. So just to run that back over one more time, our first reaction, liquidity sweep, failed to go higher. On the 5-minute, it failed to close higher. We came down, got our break of structure. Now, for extra confirmation to wait out, being stopped out and finding our most optimal trade and setup. Then, I waited for another slingshot, and I got our first reaction. Liquidity sweep, break of structure, entered at the CE, paired up perfect on this inverse fair value gap, and then it ran down and touched TP perfectly. And I got this one on screen records, posted to TikTok, this trade, but it literally, boom, tap, take profit, and then hasn't hit that level since. So, the data in the slingshot is extremely precise. And, you had like 10 more setups form here. Like you could have took another setup right here and hit 3 trades back to back. You have a first reaction really true. Have our liquidity sweep, break of structure, fair value gap paired. If you would have followed your stop like you should have, you would have gotten stopped out at probably reasonably right here at 19 points. And you wouldn't have had to risk not jack shit. Your 10-point goes all the way up to there. You see it? First reaction, liquidity sweep, fair value gap paired, also inverse fair value gap. Boom, touch. You're following your stop. Let me get rid of these lines so it doesn't confuse you. You're following your stop from there to here, to here, to here, to here, all the way down to where do you get your next pullback? Right there. And then you go down, where do you get your next pullback? Here. And then where do you get your next pullback? Down. So you would have got all the way down to here before it would have stopped you out. It's a pretty damn good trade. That would have been 3 right there. That's a big day. But these were the big 2. This was the quicker reaction, the quicker fast setup. And then this was the bigger setup with the smaller one here. All right. Stay disciplined. Hope this video helped you guys out.